Welcome to the M&A Unplugged podcast. Our mission is to help you be better prepared for your business acquisition or sale. Being prepared will ensure you maximize returns and minimize risks. This is M&A Unplugged with your host, Domenic Rinaldi.
Welcome back. I'm Domenic Rinaldi, host of the M&A Unplugged podcast. And today I'm going to be talking to you about two things. One, what is the current state of the M&A marketplace and how have deals changed during this period of time, during COVID and likely post-COVID? I'll tell you, I've been incubating this podcast for a while now. I've been fielding a ton of calls and emails from clients and prospective clients wanting to understand what's happening in the marketplace. Are deals happening? And if so, have multiples changed? And I'll tell you, I wanted to wait until we had the election behind us, so we had some concrete information about where things might head, especially from a tax perspective. And I think we have more clarity today as I sit here middle of November that it looks like Democrats obviously have gotten the White House, and it's likely that the Republicans will win the Senate races that are still to be, the runoffs that are going to happen in Georgia. And so if that happens, some of the tax changes that have been proposed are unlikely to happen. And if there are changes, they'll probably be much more muted than what had been planned, which I think holds very well for M&A activity. So I'm going to get into what's happened in the marketplace from our vantage point this year, what we see for next year, and then the things as buyers and sellers you need to be thinking about and contemplating as you're looking at doing deals, because the landscape has definitely changed, and there are things that you need to take into consideration as you move forward and look to do deals. But before we get into today's episode, if you want to avoid the common deal pitfalls and the risk of losing substantial dollars, you really need to know how ready you are to buy a business. Because I believe proper preparation is so critical to deal success, we have published several free resources to help you be better prepared. You can access these resources on our website at k2advisor.com/resources. That's k2advisor.com/resources. Being prepared is critical to ensuring that you maximize revenues and minimize risks. Thank you for being here and hope you enjoyed today's episode. All right, folks. So as I had teased in the intro, I really want to talk about why the marketplace continues to be, for mergers and acquisitions, continues to be so robust despite what's happening around us with the pandemic. And one of the clear indications that I'll point to, if we look just in our firm, and our firm happens to be a larger M&A firm, we do a lot of deals on an annual basis across a broad range of industries. And one of the things that I can point to is just the pure buyer activity that's taking place. If we look at activity right now, the number of buyers that we're working with to help find a suitable business for, that number has substantially increased over the same period last year. And so with that many buyers in the marketplace, you're sure to have a good, healthy flow of deals, whether it's healthy deals or distressed deals. You're going to have a good, healthy flow. And I predict that now that the election is behind us and likely some of the tax changes will not happen, or they'll be much more muted, that this level of activity will clearly continue into next year. So why has it stayed so robust? Well, first, you have the cost of capital. The cost of capital is so low. Interest rates are at historically low levels. So it's so cheap for buyers to go out and secure loans to go make acquisitions. And lenders have stayed very active. The capital markets are wide open. Lenders, while being more cautious and wanting to look at deals more carefully, are not shying away at all from acquisition loans. And so, you combine low interest rates with the capital markets being wide open and the number of buyers in the marketplace, being up substantially, makes for a really robust M&A marketplace. Now, we have to have a good number of healthy deals on the other side, healthy businesses to be acquired, but at least the buyer activity has remained very strong. And you have on top of that, I haven't even talked about all of the private equity groups and the amount of money that was raised just prior to COVID that, is still sitting out there on the sidelines waiting to be deployed. And so you have all that money sitting in the coffers of private equity groups, strategics, companies who have done well, holding on to cash on their balance sheets. So everybody's poised to go do deals if they can find the right ones. And I'd say the two most active buyers in the marketplace right now appear to be strategics, companies who are looking to grow through acquisition, and small investor groups or high net worth individuals who have been dislocated and looking to go out to do transactions. But I mentioned earlier that there is a shortage of good businesses. And so it's really a tale of haves and have-nots when you're looking at business opportunities. You have companies that during the pandemic have done incredibly well. We're seeing businesses who are experiencing 200, 300, 400% increases in their revenues because they happen to be at the right place at the right time. Fortunately, we're seeing the opposite end of that coin where there are businesses that are really struggling to stay afloat. And hopefully, as a vaccine gets introduced and things can maybe get back to normal, we'll start to see some of those businesses recover and get back to some level of normalcy. And I think if that happens, when you combine that with the number of buyers that are in the marketplace with healthy or recovering businesses, as long as interest rates stay low, which it seems like they clearly will, and the capital markets remain open, we'll have, I think, a very robust mergers and acquisitions environment going into 2021 and maybe even well beyond that. But my advice, if you're a buyer, is that you have a couple of things in place. Have a plan. Before you get to the marketplace, really understand what you're looking for. What is your key criteria? What would move the needle for you? Have a team. Assemble the team ahead of time. And not just any team. You need to make sure that you have folks by your side who are specialized in mergers and acquisitions. An attorney, an accountant, an M&A advisor, consultants, whoever it is, but make sure that they have substantial mergers and acquisitions experience. Because when I get to the next topic, which is how you're looking at deals, you're going to need that experience probably now more than ever. Have your debt and your equity source. With so many buyers chasing so few deals, if you get into a deal and you don't have some of those things already accounted for and you're scrambling to figure out your debt and your equity, you could very well lose that opportunity. We just saw that happen with a client where they didn't move fast enough, and sure enough, the seller had a number of parties coming after them, and the seller abandoned our buyer and went to the next seller because our buyer just wasn't prepared to move quickly enough. And it was too bad because it was a great opportunity. Efficiency. I am probably pretty famous for saying you need to move fast during deals. I'm changing that to you need to be efficient, and because you need to be very careful with what's gone on, and even with a healthy company, you really need to dive in and figure out, what are the future prospects. They might be very healthy because they're a benefactor of what's happened with COVID, but if we get to a post-COVID environment, what's going to happen? What's going to settle in? And so really understanding post-COVID environment, both for healthy and unhealthy companies, is going to be important. So you still need to move quickly and efficiently, but be very careful. So what's changed? How should you be looking at deals differently than maybe you were looking at them before? Because some things have clearly changed in how we can even, visit deals and look under the covers and taking tours. So first and foremost is looking at what I call your COVID financial analysis. If you have a healthy company who's really experiencing tremendous growth as a result of what's gone on, you need to understand what's going to happen after we get through this period of time. Have they reached a new level for their company, or are things likely to settle back down? And if so, where are they going to settle back down to? Because you have to be careful not to overpay for what's happened. Conversely, you might have businesses who have been really impacted negatively by COVID, but still have very good, strong foundations and will bounce back, or are already showing signs of bouncing back. And so doing that analysis and understanding where that business might get back to once things settle down will be really important. And you'll need to have the right team of advisors around you to make sure that you're looking at things properly and making proper decisions so that you're not either overpaying or losing opportunities because you're underpaying in a situation that you just really haven't, read the tea leaves appropriately to understand, what are the prospects for that business. So the next thing is discovery. In years past, you would get a deal on the table and you would start the dance between the buyer and the seller, and you'd go out and meet the owners of a business and take a tour of that business and really start to build up some rapport. And as you can imagine, that's just not happening right now. People don't, want to get together the way they did before, or if they are, it's in a very limited capacity. So building a rapport during deals has become a bit of a challenge, but I'll tell you that you can't forego it. You can't just say, all right, well, building rapport is just something I can't do. You have to do it. It's so important for the buyer and seller to really build some sort of a rapport and get to know each other, because it's the surest way that a deal will get done, because every deal hits a speed bump. And when it hits a speed bump, you need to know, and you need to have that foundation to work through it with the other party. And without that rapport, chances are that deal's going to die. And so you have to work harder, whether that's Zoom meetings, virtual meetings, FaceTime, whatever it is, but any way you can to have touch points, even if they're virtual touch points, so that you're getting to know each other and understand what each party really sees as a win-win outcome of a transaction. Discovery just has to be done differently. Sending teams of people into an office to go through records and financials is really probably not feasible anymore. It might be in certain situations if you can get in there after hours or on weekends when nobody else is around, and there's no concern that anybody could infect a workforce, or any chance of COVID being transferred if that risk exists. So doing discovery through a virtual data room, and this is where good M&A advisors and M&A attorneys and accountants can really come in and help, because you can do a lot virtually through virtual data rooms, and really understanding how to leverage that. So let's move into deal structure. You're going to have to get creative. There's just no doubt about it. If you want to get a deal done, whether you're a buyer looking at a deal or a seller, trying to get something done, if your business is doing well or it's been impacted negatively, there are ways to do these deals, both of them, but you need to be flexible. You need to understand that nobody wants to underpay, and nobody wants to steal a business out from under somebody. So there's got to be some sort of common ground that allows for flexibility should things not quite turn out the way everybody had hoped. And so, for owners, maybe a willingness to give the buyers some downside protection. If you've been one of those businesses that has experienced tremendous upside, and maybe the upside is here to stay for your business, and that's great. But if it's not, and it's not close to what's happened historically, well, maybe there's some accommodation where you can address any potential future gap. Conversely, buyers, if you've got a business that has been negatively impacted and it looks like the prospects for that business to bounce back are good, maybe there's a way to bridge the gap for the seller so that they can realize, that rebound, if it happens in a reasonable period of time, so the business hasn't been completely undervalued. Otherwise, I think sellers are likely to sit on the sidelines if they can, if they've got the capital to do that. They're going to sit on the sidelines and wait for it to rebound themselves, and then realize a full value on the other side. So there are ways to bridge these gaps. And I think any attorney that you speak to now has said they're really challenged with some of these ways. And there are things like performance notes. So if a business continues to perform at high levels, no problem, there are payouts at those levels. If it's a business that's underperforming and it's likely to come back, and it does come back, those performance notes can kick in. You can also do it in the form of an earnout, so that you identify future payments tied to certain milestones. And those milestones could be any number of things. It could be revenue, it could be client retention, it could be employee retention. It depends on what's important in that transaction. But whatever's important, you can build an earnout or a contingent note or a performance note into the deal structure. Now, what I will tell you, and any good attorney will tell you, is that some of these structures are fraught with potential lawsuits down the road. They have to be carefully crafted. You need professionals to craft them. People who do it all the time so they can think through for you, what are the right triggers? How do you keep yourself out of trouble in the future? Because the last thing you want is a lawsuit a year, 2 years later after a transaction is done because there's a misunderstanding about how the performance note should have worked, the earnout should have worked, whatever it is. The other thing in a deal that you really need to start to accommodate for are reps and warranties. Clearly, in this COVID environment and post-COVID environment, reps and warranties are being taken to a whole new level. Things that we hadn't thought about before, risks, future pandemics, whatever it is, things that maybe are unknown to the parties, but need to be accommodated for in the reps and warranties. And again, can't stress enough how important it is to have good legal counsel that can represent you, somebody that does it day in and day out. And if you don't have a good attorney, if you don't have an M&A attorney, please call me. Please call our firm. We're happy to refer you. We have dozens and dozens of tremendous M&A attorneys that we can refer you to. Diligence. So we're going to talk a little bit about diligence. When you're looking at a firm now, you have to look at it through a slightly different lens, because you're not only looking at it from the lens of what's happened in the past, but will the business continue to operate in the future for things that maybe are unknown at the moment. So, what are the cyber protections in that business? Does the business have IT redundancy? How is it handling remote work capabilities and virtual employees? Does it have the infrastructure in place, or at least the foundation that you can take to the next level? Did the previous owners build business continuity plans? So if there are, minor or major disruptions, everybody understands how they'd operate in that scenario and what they would do. Your business interruption insurance is going to come into play big time. I think more and more people are going to be looking at that sort of insurance as a safety net should the unforeseen happen. And so, understanding how the current business operates for some of these things in diligence is going to be really important as you build your plan and your transition plan taking over. Again, attorneys, there are consultants that specialize in transition planning and in integration planning who are already modifying their diligence templates to accommodate for some of this and things that you really need to be thinking about. I really believe that the M&A market is going to continue to be very robust. I think we're going to see a healthy number of transactions continue to happen in 2021 and beyond. I think if the capital markets stay open, interest rates stay low, businesses start to rebound, growing through acquisition is one of the best ways to grow. If you're trying to acquire your first business, acquiring versus starting is, I think, a much safer bet to getting into a business. I think the road ahead is going to be very strong for M&A. I know for our firm, we've experienced a record year in 2020, best year ever by a long shot, in the middle of all of this craziness. And I think the future prospects look tremendous. So let me end with a couple of reminders. One, have a plan in place. Build your plan. Whether you're a buyer or seller, if you're a seller, put all the pieces in place well before you're ready to go to market. If you're a buyer, really put all the pieces, your acquisition pieces in place. Have your plan settled. Know what you're looking for, what your criteria are before you launch a search. Assemble the team. Put a mergers and acquisitions team by your side. People that will have your back throughout the process. And folks who are not afraid to, speak their opinion. If they see that something isn't right, they're willing to guide you in a different direction. Or if they see that a deal can be done and obstacles can be overcome, they're going to offer up tremendous advice and help you get the deal done. Have your debt and your equity sourced. Understand where your equity is coming from and how you can secure debt. And plenty of ways to do that. And if you don't know how to do it, call us. We're happy to walk you through that. And remember, I think you're going to have to work very efficiently. Speed matters, but you have to be cautious. So while I used to say purely, you have to move fast, I'm changing that to you have to move very efficiently because you still need to get through the process as quickly as you can, but as thoughtful and as thorough as you possibly can. I hope you enjoyed this episode. All of today's information will be available in the show notes. If you enjoy our content, please remember to subscribe and review our podcast. I look forward to seeing you again on the next episode of the M&A Unplugged podcast. And until then, please remember that scaling, acquiring, or selling a business takes time, preparation, and the proper knowledge.